Well, joining us to talk about the GDP report, Kathleen Stephansen, chief economist of Aladdin Capital Management. She's live with us from Stamford, Connecticut this morning. Kathleen, glad you could be with us. What's your read on this initial reading of third quarter GDP?
Yes, good morning. I think that this puts a stamp of approval that indeed the recovery is in place. It's a little bit stronger than what the consensus was, close to our forecast. And the three contributors here are consumption. But do keep in mind, and I don't want to spoil the party, but you have to keep in mind that a lot of this consumer spending increase is thanks to government support. Government support, we know the cash for clunkers. We also know the tax credit. So that is going to wane, and we'll have to see going forward. And in fact, we saw that earlier this week with consumer sentiment, that it was there is a little bit of a softness getting into the fourth quarter. The inventories, that's a sign that the inventory cycle is turning. We're not yet seeing outright build of inventory, but this is a good start. And then the export sector will have to see the whole recovery there in the global the economy, particularly emerging markets, should spill over into the U.S.
Now, Kathleen, you had concerns for the fourth quarter. After this better-than-expected figure, are you less concerned?
No, I am concerned because let's remember that 70% of this economy is still the consumer. And what we've seen with this consumer confidence, and we'll see tomorrow with the expenditures and the end of the cash for clunker, essentially is going to push the consumer to retrench. The consumer, remember, is still in a balance sheet repair mode. And that means that he or she will be careful in spending. And wage income is not growing very fast at all. So we still have major headwinds here for the consumer, and that worries me.